Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Tuesday, so we'll be expecting a lot in the markets today. So today's key highlights is what we are observing as currently being breakouts happening in various markets. So I will be starting with the charts before we even get to the economic calendar and see what we're expecting for the day. So one of the key highlights is USD CAD currency pair. So it's the one pair that has been trading in this huge triangle pattern. So as we can all see, there's been quite some good moves down and then up and then back down, up, down, up, down. And you can already see how the market was concentrated around here. And then in the last 1 hour, we happened to see a very clear-cut breakout, which is clearly indicative of a potential upside that could continue for the rest of the day on a USD CAD currency pair. So there is a good chance that we have already broken outside the triangle, and we could be seeing some good impulse towards the upper side. So for shorter term day target, then we could be looking at this day's high. So 1.35628 seems like a short-term target. And of course, we know the play, there's a good chance that the market could also rally all the way up to this level here, 1.36365. So judging from what we are seeing with the dollar index, it has been really strong for the last 2 weeks. So you can see since the dollar index bounced at around 100.8, made quite a good rally. Last week was also continuously rally, save for Friday where the market was pulling back down. But as you can see, this week from yesterday, the dollar index has been making an impressive recovery. And today, there's a good chance that the dollar index will retest last week's highs. So if this happens, then we might be able to assume that the USD CAD currency pair will also be making quite an impressive run. So that was a highlight I wanted to note before we proceed. So the other key highlight is on Brent oil. So yesterday we analyzed these and we saw this was a really nice bounce from the lower trend line towards the upper trend line, trading inside a triangle. So clearly it was a good winner, but today you can see the market is pulling back downwards. So perhaps there will be opportunities for another entry towards the upper side. So far, there has been a couple of updates in the market. So there is a good chance we could be seeing some volatility happening in Brent oil. So as for Euro USD, it's currently bouncing off a major resistance line here on the 1 hour chart. So we can all see the number of times the Euro USD has been testing this particular trend line, and now it seems to be headed lower. So the strength of the dollar is pushing the Euro USD further back downwards. So if you look at Friday's low of 1.07602, then there's a good chance the Euro USD could be headed there. We also have New Zealand USD making an impressive run all the way from the upper trend line. So this is perhaps a little bit too late, but if you manage to capture the rejection of this resistance and the increased momentum downwards, then congrats on your trade. It seems to be a really nice play after the market bounced from this particular trend line. So as for pound USD, it's also doing something similar with Euro USD, but now it's already too far gone. So with support at 1.23924. So if I was short, I would probably exit here and then look for another opportunity. So the key price level remains 1.23924, which was the lowest price on Friday. So besides that, we are seeing the rally in US equities losing momentum. So while the SP 500 was very strong, you can see it found a very strong resistance on Friday. Yesterday and today attempted to break the same area again, seems to be failing. Same case for US Tech 100. It made some good rally, but if you look at yesterday and today, we are still testing this particular resistance. So this is an area of interest, especially for people who are looking for shorts. So US 30 seems to be the most bearish one. Didn't manage to rally to newer highs compared to the others. So after making some good rally and then dropping on Friday, this week it seems like it's continuing further back downwards. So those are some of the key highlights for the day. And of course, for gold, it has closed back down lower as projected yesterday. So we were expecting that gold would eventually drop to the previous low of around $19.51 per ounce. So it's playing out as expected. So our key price level for today will be 19.51. So once the price gets here, we'll be looking for signs of rejection or continuation. So if it's a straight out break, then we go down lower. And of course, if we happen to see bullish entry, then we start targeting 1974 back again. So that being mentioned, it's time to look at the key highlights for the day. So if you have any questions or comments, feel free to type that in the Q&A section and I'll be responding to that right away. So clearly, the biggest news for this morning so far has been Germany having a very strong retail sales sector and also manufacturing weakening. So this has been the key highlight. You can see German manufacturing PMI came in at 42.9, indicating a contractionary environment. Analysts had estimated a forecast of 45, so the outcome was lower than forecast, and the previous number was 44.5. So clearly, the manufacturing in Germany is weakening, and of course, services are expanding in this particular trend we've been seeing over the last couple of months. So we are seeing this trend happening across the Eurozone, where services sector is really improving and expanding, but manufacturing is really slowing down. And of course, this has an angle on the price of oil, where we know that manufacturing is a big consumer of oil, either directly or indirectly. And if manufacturing is really going down, then demand for oil also tends to go down. So yet another round of negotiations, and this is about the US debt ceiling. So President Joe Biden and House Speaker Kevin McCarthy were unable to reach a consensus on raising the US debt ceiling. Nevertheless, they praised their discussions as fruitful and vowed to continue talking in order to prevent a disastrous US default. So it has happened time and time again. And whenever we have these negotiations, there's always a very high likelihood that the two parties will eventually agree on a deal in the last minute and they will push the debt ceiling higher. However, there are negative consequences to that. If the debt ceiling is raised higher, then the US may have to basically tighten rates further or tighten policy further through fiscal policies rather than monetary. So by fiscal policies, we could be seeing a bigger budget, a smaller budget happening in the US. And at the same time, we know that Jerome Powell is still walking the talk. He wants to get inflation back down to the 2% target. So as long as inflation remains high at the previous number, which was 4.9%, then further tightening could strengthen the dollar and perhaps even weaken equities. So if they fail to agree on a debt ceiling, and this is the biggest risks that investors are concerned about, one of the key things that could happen is that the US could be downgraded in terms of credit rating, and this would be very disastrous for the US equity markets. So they're trying to avoid that happening. So if the US was to default on its debts and obligations, that would be really bad for the global financial markets, not just the US. And at the same time, we could be seeing the US cut its spending on social programs. As I mentioned, we could be seeing people go on unpaid leave, especially government employees, and nobody wants this to happen. It's very bad politically for the leaders currently involved. So I trust, and this is my personal opinion, that eventually they will reach a deal or an agreement to raise the debt ceiling in the last minute. And once this happens, then we will be following closely on the reaction from the Fed. So Treasury Secretary Janet Yellen reiterated her warning that the situation might arise as early as 1st of June by stating that it is now highly likely that her department will run out of cash in early June. So this is quite concerning, especially considering we just have 7 days before we get to that point. So days after Chair Jerome Powell indicated a pause in raising interest rates in June, two Federal Reserve hawks saw the need to do so this year, while two other members advocated for patience. So according to Governing Council member Pablo Hernandez, the European Central Bank still has ways to go before raising borrowing costs, which should stay high for a considerable amount of time to keep inflation under control. So oil prices increased as a result of US authorities, notably President Joe Biden, taking a generally hopeful stance on resolving the debt limit deadlock and encouraging risk taking. So as for the economic calendar today, we expect French manufacturing PMI. This has already happened. German has already happened. So for the entire Eurozone, the number will be coming up at midday. Then we'll be looking at UK composite manufacturing PMI, UK manufacturing PMI, and also the services PMI. Then later on in the day, we'll be having a couple of speeches from various central bank governors. So we'll be having the Guindos speak on ECB later in the day, as well as Josh Nick. Then for the ECB, we'll also be having Muller speaking. For Bank of England, there'll be 4 speeches from Bailey, Bill, Tenreo, and Mann. Then later on, a speech by Enria on ECB. So it's one hell of a day. We expect a lot of stuff to be happening. So for the key events for the day, I would say the US flash manufacturing PMI, as well as our flash services for the US, and this will be at 4:45 p.m. For the UK, 11:30 a.m. This is both flash manufacturing as well as flash services PMI. So these 2 data points seem to be very important for the day. So that's what we will be on the lookout for. So as mentioned, for Germany, weaker manufacturing, but very strong services. You can see the number was 57.8. So the key point for the day is to observe these 2 data points, and at the same time, follow through with a couple of speeches, with the main wild card being the debt ceiling negotiations. So any information coming out of the debt ceiling negotiations will be very instrumental in determining the directions that that the market will be taking today. So now that I've covered that sufficiently, I'd like to check on your questions, and hopefully I'll be able to answer if there's any. So hi, Sue, Rodney, hi, Patrick, hi, Joseph. Thank you guys and good morning. Could you drop the Telegram link to your personal group? Yes, I don't mind doing that. So the link is right there. There's this tool called the CME FedWatch tool. It's said to reflect the market expectations. Who owns or regulates this tool? Fed has previously raised rates outside this tool. I haven't checked it out. This is a CME FedWatch tool. I think it's a tool that basically uses the 30-day Fed futures rates in order to price in the expectation of a rate hike. I think you can get one on investing.com if I'm not wrong. So I'll be checking that quickly and then I'll share with you. Hopefully I'll be able to find this in a quick time. So just a moment, just checking these out. So there it is. How can I access class? This is a real good question. So for FX Pesa, we have several classes running across our satellite offices. So we have the headquarter in Westlands, that is Oracle Towers. We have an office in Kitengela. You have an office in Eastleigh. We also have an office in Thika, as well as Eldoret and Nakuru. So from your username, it seems like you are in Nakuru. I don't know if you're in Nakuru. So if that's where you are, then you should head straight to Tower 1, 3rd floor, and you'll be able to access our daily classes. So besides this, we also are having these webinar sessions happening every day. So for the market snapshots, it runs every morning at 11 a.m. from Monday to Thursday. And this is where we get to cover the highlights for the day and try to identify potential trading opportunities. So besides these, I think there was the question about Fed rates. So from what the market is pricing in, I'll be showing you the tool from investing.com. It's called the Fed Rate Monitor tool. So just to give you a brief highlight, the Fed Rate Monitor calculator is based on CME Group 30-day Fed futures prices, which tend to signal the market's expectations regarding the possibility of changes to US interest rates based on Fed monetary policy. So the tool allows users to calculate the likelihood of an upcoming Fed rate hike or cut. So clearly from this tool, on the next meeting, which will be on June 14, this is when the Fed will be meeting, there is a 85.8% likelihood that the Fed will hold rates at the current level, which is between 5% and 5.25%. So there is also a small percentage of 14.2% that the Fed will go for a rate hike of 25 basis points, eventually moving the interest rates to between 5.25% to 5.50%. So I've shared the link to the tool. So check it out and take your time, try to understand it before you use it in your trading. So that's it for the day. Thank you very much, guys. Thank you for your time. I hope you have an awesome trading day.